Start. You have two. So the first question says, the diagram shows a monopolistically competitive firm. Which point represents allocative efficiency? We should know what allocative efficiency is right now. It's when your marginal revenue equals to your marginal cost equals to your average revenue. Where your marginal cost is the same as your average revenue at point C. So, do you get it?
Yeah.
Good. We go to question 2. What is an argument against government intervention when there is market failure? When there is market failure, the argument is that government also fails. And when government fails, if government intervention doesn't seem to solve the market failure, it's government failure. So the answer is C. You get it?
Mm-hmm.
Question 3. A government is choosing between 4 routes of a new road. The table provides details of the cost and benefits associated with each route. The government wants to get the highest return for taxpayers in terms of the social benefit relative to the private cost. So the government wants to make sure that taxpayers are better off. So what could be done to make a choice here? So because government wants taxpayers to also enjoy the benefit of paying their tax.
Mm-hmm.
So we should find the place where the external benefit is more, the private benefit is more, and the private cost is less. Do you get the point I'm making here? So at this point, we have our private cost to be 20, which is good for taxpayers. We have our private benefit to be 25, which is still far better off, and our external benefit is 10. That shows social benefits. So the answer is C. Do you get it?
Mm-hmm.
While we're choosing C, we should have chosen A, but A has external benefit of 5, which is not good. Question 4. Donald maximizes his utility when buying paperbacks, books, and audiobooks. The price of a paperback book is $3, and the price of an audiobook is $6. If the MU of the last paper book was 12 units of YouTubes, what was the marginal utility of the last audiobook purchased? So 12 divided by 3 gives you 4. So 4 is the constant. 4 multiplied by 6 is 24 YouTubes.
Mm-hmm.
D. Question 5. Which statement correctly describes the result of a price increase for an inferior good? If an inferior goods increases, the point is that with an inferior, if the price of an inferior goods increases, we have to think about the income level and the substitution level. Those are the two things we have to think about.
Mm-hmm.
The income effect and substitution effect. So as this happens, what will happen to the income effect? The income effect will mean that more goods will be purchased. The substitute effect will mean that less goods will be purchased, because with substitution effect, it means we are not going to buy those goods anymore. We start buying it from its competitors. Do you get the point? Yeah. So the answer is C. Question 6. We said, which statement about monopoly is correct? What does the monopoly do? The monopoly will try to maximize sales when the marginal revenue is equal to 0. Do you get the point? Question 7. That's 7. 6, right?
Mm-hmm.
We go to 7 now. They said a satellite communication company is bought by an investment bank. That is diversification.
Mm-hmm.
A communication company buying a bank. Diversification. That's conglomerate integration. Conglomerate integration. Question is, the diagram shows the long-run average cost curve for firm and the 3 short-run average cost curves. Which statement is correct? We have our short-run average cost. 1, 2, 3. What does short-run average cost tells us? It shows that as soon as our as soon as our output increases, there should be a limit that as soon as it exceeds that limit, our cost of production will start increasing again. So it is U-shaped. It is U-shaped because as output increases, your average revenue should fall in the short run. But as soon as it exceeds that point, then it becomes these economies. We turn to scale.
Mm-hmm.
Do you get the point? So short-run average cost talks about a U-shaped curve. So the answer is, they said the law of diminishing returns explains why each of SRAC curve is U-shaped. Yeah, that's the answer. Is it clear, please?
Yeah.
The next one.
What is the most likely reason that barriers to entry might lead to X inefficiency?
X inefficiency means that there's internal inefficiency in the firm. There's internal what? Inefficiency in the firm. So if there's internal inefficiency, what does that imply? It means that the firm is incurring more cost in the cost of producing output. It's incurring more cost. So here they said the firm has no incentive to cut its cost of production. Yes, that is X inefficiency.
Okay.
Do you get it?
Yeah.
That's number 9B. Number 10.
The diagram shows the long-run cost and revenue curves for a public sector monopoly. The government decides to set a price that maximizes social welfare. What will be the consequence?
If governments try any price that government is setting in a monopoly to maximize social welfare, we make that monopoly to run at a loss. Because monopoly wants to make abnormal profit. But now government is setting a price below what they will be thinking to set their price. That means it's going to run at a loss. So the answer is B. Question 11.
The information gives the characteristics for a market structure. Which market structure is most likely to be?
The two leading brands control 60%. That's few large firms are controlling the industry. Other large firms and few smaller firms exist in the market, yes. Price tend to be stable. Price is stable because they don't use competition, or they don't use competition, or they don't use competitive pricing. They use non-pricing promotional method, which means they don't deal with price, they deal with advertisement. Are you with me? That is what the third point is saying. There are significant barriers to entry. There is no barrier to entry, but with advertisement, so much investment on advertisement makes others not to want to join that industry. Not that there's real barriers to entry. So that is oligopoly.
Okay.
So and the answer is C. Question 12. So the diagram shows a firm in imperfect competition. It changed its aim from profit maximizing to sales revenue. So if you are changing from profit maximizing to sales revenue, your marginal revenue and your average revenue are at the highest. So if your marginal revenue and your average revenue is at the highest, it means you are making abnormal profit. Do you get the point?
Yeah.
And making abnormal profit is the same as making supernormal profit. So which type of profit was it making in each case? It's both abnormal. Profit maximizing is abnormal. Sales revenue maximizing is abnormal. So it is D. Clear?
Yeah.
Question 13. It said, in various countries, the supply of public utilities such as water, electricity have been licensed by the government to few private firms. What should government do to persuade these profit-seeking private firms not to overcharge consumers? Create a substitute. Break that monopoly. So the answer is D.
Okay.
If you are able to switch from one to another. Question 14. A government tends to use pollution permits to reduce environmental damage. Under what circumstances is this policy most likely to fail to achieve the intended reduction? If this government policy is not strict enough to reduce carbon emission, that means pollution is not stopping. So that is D. Is it clear? Question 15. A government is committed to reducing the Gini coefficient. What is Gini coefficient? It talks about the inefficiency, the inequality in income. Inequality in income is the Gini efficiency. I said when it is 0, it is still okay. But when it is 0 to 1, it is high. That means the income, inequality in income is high. But when it is above 1, it means that the income inequality is so high that it's not good for the country or the economy. So, because they talked about Gini inefficiency here, they talked about Gini coefficient here, they're talking about inequality in income. So, how will this policy fail? It will fail if government is still increasing regressive tax. Because regressive tax is that tax that low-income earner pay more than high-income earner. That is why it's regressive. That means the tax burden on low-income earner is more than the tax burden on high-income earner. So we are trying to reduce the gap between the rich and the poor, and you are giving us regressive tax. It will fail to achieve the Gini coefficient. So the answer is B. Clear. Question 16. Which calculation would give the marginal revenue product, MRP, of labor for a firm selling its product in an imperfectly competitive product market? Average, no. It's always extra for marginal. So we check extra product produced by an additional worker multiplied by the marginal revenue of the product, not marginal price of the product, revenue of the product. We talked about it yesterday too. So the answer is C. Question 17. It's here, 17. It said the diagram shows the demand for and supply of labor in 4 markets. In which market would labor transfer earnings exceeds its economic rent? Transfer earnings means the level of income that an individual will be willing to get to supply his labor. That means with this amount of money, I will be willing to work. That is transfer earnings. Labor or rent income, economic rent, is the extra money you make from the output you put, from the effort you put.
Mm-hmm.
Do you understand? So which points would make us to be able to have transfer earnings exceeding our economic rent? First, where your wage rate is falling, where you can shift your demand curve rightward at 1. Your demand curve can shift rightward from D. Demand for labor can shift rightward. Because when the demand for labor increases, wage rate will rise. Are you getting what I'm saying? So the first graph tells us that we can shift our demand curve rightward.
Mm-hmm.
And when you shift it, it will move above the wage rate. 1. But the second one, we cannot, because whenever we shift it to the right, it's not going to reach the supply of labor.
Mm-hmm.
Do you get the point?
Yeah.
Here, it's above the supply of labor. The graph 2, it will move above the supply of labor. So that means wage rate is not increasing.
Yeah.
So it's contrasting. As soon as the demand for labor increases, wage rate should increase. But if the demand for labor is increasing, it should increase more than the supply of labor. So here, it's still below the supply of labor. So it's not 2. For 3, the same thing, is below the supply of labor. For 4, it moves more than the demand for labor. It moves more than the supply of labor. So the answer is 1 and 2. Is it clear? So question 1 and 4, sorry, 1 and 4, which is B. 1 and 4, yeah, B. Question 18. It said, which objective would not be suited for a government if it were seeking sustainable economic growth? If you are seeking sustainable economic growth and you are using all your resources, how is this sustainable? We said sustainable development means the decision we take now must not affect the future generation. Mm-hmm. But now government is using all the resources because it wants to encourage, it wants to grow, it wants to increase the economy. That is not sustainable. Is this sustainable? No. So the answer is A. Question 20. No, sorry, 19 now, right? Okay. What is the difference between a country's GDP and its gross national income? GDP is the total value of a country's output in terms of finished goods. And GNI is the total income that an economy is making through its residents in Libya or abroad. So the difference between them is the net property income from abroad. See, clear, right? Not only the net property income from abroad, because you have even the residents here, they have income too. But since they're not talking about in and out, so we take only abroad. Is it clear? Question 20. Some individuals seek to increase their share of existing wealth without creating new wealth. They want to increase wealth without creating new one. How? That means they are not using capital. That means they are using the shortcut here. Do you get the point? Yeah. So, this can be a problem in developing the economy. What is an example of this behavior? Using shortcuts. Bribe. So, a government official are taking a bribe for special treatment for the person offering the bribe. It's a shortcut. Yeah. You've not done anything and you are getting that money from. You are getting money. So, it's A, 21. What is necessary to calculate a number of unemployed? When you have to calculate the number of unemployed, everyone of working age who is not in employment, you cannot use that. So it's either A or B. So we go on. Those of pension age who still want to work, yeah, they don't have job, but they still want to work. So they are part of unemployed. Part-time employees seeking full employment. Yeah, they are part-time, but they are looking for more job. So it's yes. So we don't calculate with the number of unemployed. We don't calculate with number of unemployed. We calculate with pensions, yes, and we calculate with those that are seeking for a job. So the answer is B. Is it clear? Yeah. 22. Yeah, the diagram shows changes in the numbers employed in 4 different industries in the city between 2015 and 2020. What can be concluded from the diagram? Finance was always the largest employer. No, it's coming down. It declines. Finance is declining. It goes up and comes down. No. Leisure had the fastest growth rate in employment. Leisure, let's see, from around 4 to around 15 or 17, right?
Mm-hmm.
That means it increased like 13,000. Okay. Let's see. That's the answer, no, but let's check. Manufacturing was the only industry to show signs of decline. No, not only manufacturing shows signs of decline, finance also shows signs of decline. So it's not C. Total employment in the 4 industries decreased over the period. No. The answer is B. Leisure had the fastest growth rate in employment from around 4 to 17. Do you get it?
Yeah.
That's question 22, B. 23. At the start of the year, the PPF for an economy is at PPF1 and the economy is at point S. At the end of the year, the production possibility PPF2 is at PPF2 and the economy is at point T. So that means the economy is within. The economy didn't shift outward.
Mm-hmm.
It's on the line of the PPF. So this shows that the economy is witnessing an actual growth, not potential growth. Is it clear? It's actual. If it is potential, it should shift outward.
Mm-hmm.
Do you get my point?
Yeah.
Any question about that?
Yeah.
Okay, clear, right?
Yes.
So the answer is what? A, yeah. 23, right? Yes, A. 24. It said, government spending in an economy increased by 4,000, while at the same time investment fell by 1,005. So what would be the increase in national income following these changes? It will be 2,500. That's 4,000 minus 1,005. 25.
Which change will allow an increase in economic money supply.
So if there's going to be an increase in economy money supply, that means our outflow of currency for trade and capital purposes becomes an inflow. So what we're saying is that whatever money that goes out from us would be as a result of investment. So as soon as it's going out, it should return in terms of returns.
Mm.
It should return in terms of growth. It should return in terms of inflow. So we don't just spend out. We are spending because we are expecting it to come back.
Mm.
Do you get the point?
Yes.
So that's when we allow increase in money supply.
Oh.
The money is going out, but it's coming back in terms of investment, which is inflow, income. Is it clear?
Okay.
So the answer is A, 26. In a country, the initial money supply curve is given by MSO, the initial liquidity preference curve by LPO, and initial rate of interest by RO. If there's an increase in the precautionary motive, what is precautionary motive? That means we are thinking of not spending because of future occurrence. We don't know what could happen in the future. That is precautionary motive.
Mm-hmm.
Do you get the point? For holding money, which diagram shows the changes that will occur? If there's precautionary motive, money supply will be at constant. Are you with me? Money supply will be at constant. The liquidity preference, we won't be spending. Liquidity preference will stay the same as 0.
Mm-hmm.
The money supply will also be at 0. That money will not be going out of the economy. Do you get the point I'm making? So here we have liquidity preference will be at 0. We are thinking about keeping money. It will shift rightward. But we are going to keep that money, but no money is going out. Do you get the point? Your LPO, liquidity preference, will shift rightward because our objective is to have more liquid. So we are keeping more money. And our money supply will remain 0. Mm-hmm. No money is going out because there's precautionary motive. The motive is to hold money. So liquidity will increase, but spending would be less because there's no money to spend outside. Yeah. Did you get it? So the answer is D. Mm-hmm. 27, okay. The UK gives aid to Ugandan government to spend on the school. One condition is that they must buy the material from the UK. That is bilateral agreement. Mm-hmm. It's bilateral agreement, yes. They said, which aid does not take place? It's a project. It's bilateral. 2 countries coming together for trade. It is tied. It is bound on agreement. that yes, we're going to do this for you, but you have to buy all these materials from here. So it's a contract. It's tied. So the only thing that is not here is multilateral. If it's multilateral, it means it involves more than 2 countries. You get the point? So the answer is B. 28. Unemployment in an economy increases. What is probably the consequence? If unemployment increases, the balance of trade deficit will increase. Sorry, there will be an increase in government budget deficit, because at that point in time, government would spend more on social benefits. So the answer is D. 29. The government of Lesotho introduces a program to promote exports and to encourage firms to expand by subsidizing local entrepreneurs. Which effect is this likely to have on incomes? The balance of payment, current account deficit, and government expenditure in Lesotho. Income would what? Income will rise. That's the first point. Balance of payment, current account deficit, we can't really tell about it right now, because it depends on other situations that involve import and export. But government expenditure will also rise. It's D. The last one. They said the government currently has a balanced budget. It is considering the possible variation in tax revenue and government expenditure shown. Which 3 options are likely to have the potential to move the budget into surplus? If government have to move the budget into surplus, it might increase its revenue, it might increase government expenditure. It might increase its revenue and reduce government expenditure. It might reduce revenue in terms of tax, and it must reduce government expenditure too. So the answer is W, Y, and no, W, X, and Z. Is it clear? Any question?